set that up. Questions as Jeremy, our speaker, goes through the presentation, please feel free to submit them in the Zoom chat box, and we'll do our best to get to them at the end of this presentation. So thank you again for joining us today for Finance Hot Topics. You can go to the next slide. And I want to introduce Jeremy Triefenbach, Managing Partner of Stage One Financial, whose firm supports brands with accounting and finance services. So today, Jeremy will be covering suggested approaches regarding the development of financial projections and planning tools for your company. Jeremy, thank you so much for being here, and I'll hand it over to you.
Awesome, thank you so much. I can provide you some insights into what's happened and where we're going. Yeah, and any questions are good questions. So happy to touch on those. So let's jump right into it. So, you know, the world has just completely flipped upside down in the past 30, 60, 90 days. And what I want to do is just step back for 2 seconds and say, what just happened? If you think back to earlier in the year, there were indications that started coming out from China that there was a really bad virus. I know for me personally, you heard a lot of things about SARS and other previous viruses that were out there, and you listened to it, but it wasn't really on your radar. Then more and more things started happening. China locked down a whole city. We had cruise ships that couldn't port anywhere because they were all sick. And so it started becoming real. I would assume that most of you start seeing all the Wayne Wu chats leading up to the decision around, are you going to go to Expo West or not? I think at that point, it really started hitting home that this could be a material impact to what's happening on day-to-day life, day-to-day business, and so on. That led to the postponement of Expo West, which I think was, again, a watershed moment and really starting to think about planning your business. And at that point, we're already starting to see retail traffic drop. About a week, 10 days later, that's when we start seeing surge buying starting to happen. If you remember that Friday, Saturday, Sunday of that weekend, it just started really accelerating in terms of number of people, bulk buying. At one point, you go to the store and everything's normal. The next day you go in and all the toilet paper is completely gone. That surge buying really happened and lasted for a few weeks. Certain categories kept shifting. It started from paper goods to staples and so on. It led to a huge amount of volume for certain brands. Others got deprioritized. And we can go into more of that in detail, but as you can see, a lot of this movement happened in such a short period of time that, you know, now stepping back and thinking about what's happening, it's just extremely fascinating in terms of impact to our society as well as impact to our businesses. If you look at these kind of periods of time, what do we know? Well, we know retail started declining by 25%. It started declining even more, up to 90%. And that 90% number is basically opened locations. We'll start seeing data come through about what's going to happen in April in terms of retail sales. The March data just came out, which we'll touch on, but the expectation is that retail sales could be as down as much as 40% month over month. So what's going to happen to a lot of the retailers right now during quarantine period? They're just going dormant. They've laid off all their staff. They are, they're figuring out like what is essential, what's not essential, but a lot of them are also thinking about how do we reactivate? We work with a lot of specialty retail, boutique fitness, a lot of beauty services. And a lot of them are saying that their capacity levels are going to be dramatically shrunk in terms of how many people they're going to let into the locations at any given time. That means that even if we're coming out of this period, it's not going to be a new normal for a while. Like if you think about, if you take an Orange Theory class, when you have 30 people in there, going forward, there might only be 10. And that kind of disruption is gonna lead to a lot of different spending pattern changes in the next, call it 6, 9, 12 months, and we'll touch on that more. What happens later in the kind of post-quarantine world and moving toward normal, we don't know. We do know that the expectations around grocery and volumes coming out of really where everybody's shopping right now, there's going to be a new normal in terms of volume. The expectation is that grocery stores can be up anywhere from 20, 30, 40% consistently over the next 6 months. This is a longer term pattern because you know, in the end, restaurants are going to still be, a lot of them are going to be shut down, or there's going to be capacity constraints. And so just ultimately, people are going to be buying more and more food that they're going to eat at home. We do see that Amazon and e-commerce are building right now, and it'll remain to be seen how much they continue to build and take share into how we spend as consumers. Like I touched on, the March retail sales were just way down, and this is only 8.7%. Again, the expectation is they could be down as low as 40%. And you look at some of the categories like apparel and just food services. Food services could be down as low as 95% plus. I mean, it's going to be dramatic. Bright spot here is that food and beverage is up 26%, and that can continue to grow over the next few months. So it's something that we need to be prepared for in terms of continual increase in volume and what that increase means longer term for your businesses. A little bit of data as relates to, this is stage 1 data, and it's related to what happened in March, month over month, for direct-to-consumer brands or direct-to-consumer channel. And as you can see, personal care exploded. We've got a couple of charts here that show some of the spikes that happened at the during the surge buying. We have fortunately, some really nice apparel and accessory brands, so they didn't see the 50% decline as others, but that's the beauty of direct-to-consumer, is that channel has remained open, whereas the stores are shutting down. And I think one of the areas that we're going to see building is both beauty and food and beverage. I think they'll continue to grow beyond these rates. We're seeing just regular build week over week in those categories. Here's a couple of examples of kind of the surge buying on direct-to-consumer from a number of brands. If you look at these, I mean, it's just, these are ginormous spikes. Obviously, they led to all kinds of supply issues and demand planning issues, but it really is indicative of what the consumer behavior was thinking about during that week of the March 12th through the 20th. A couple other examples. This is a beauty personal care brand. As you know, with all the retail stores shutting down, especially on the beauty side, Sephora and Ulta and the likes that carry the large majority of the volume being shut, they have to find different routes to get their products. Well, this is one area that are going heavily direct to consumer, and a lot of them are going direct to the brands. So as you can see, this wholesale dropping off here, just a dramatic shift in their direct to consumer business. Here's an example of a food and beverage business where if you look at the period where the surge impacted the business the most, it's usually obviously a week or 2 weeks later when the refill orders come through. So if you look at the surge buying happened in the, call it the 12th, 13th, 14th, 15th, the orders were coming through subsequently in the next following week or two. And this brand saw a very nice surge. However, you can see drop-offs coming out of that surge buying. Here's another example of a food and beverage business where they saw some surge. Clearly that down spike is probably a supply issue just because of the amount of demand, and then it just kept building. So there's just all kinds of variability that have happened from brand to brand, depending on what category they're in, what channels they're in, and so on. So as we think about how do you manage this volatility, it's one of the hardest things in the world is to really predict the future, right? No one's super good at it. In times of volatility, it's really difficult. And so what are the things you need to do? Well, first step is you have to really understand the data. The data will at least give you insights into what's happening. So you might be looking at your distributor data, but if you're not looking at consumption data at retail level, you can be off because distributors might be buying in different patterns than what's actually happening in the store. So it's critical that you get a good perspective of the different data points that you have. Try to get consumption data, get information from brokers, get some reports from distributors, trying to triangulate what's really happening, not just in your business, but also understand what's happening in your category too. You might be up 30% and feeling really excited about that, but your category is up 200%. So you really need to understand the new norms that you're living in right now and try to understand it as much as possible as changes occur week to week to week. Our hope is that the volatility will dampen a little bit, but as we move from getting into a more sustainable period of time when we're in quarantine, that's going to change again as we move out of quarantine. And so again, that will lead to more and more volatility. So again, start with really gain a good understanding of what's happening in your business and how your products are performing. And then from there, once you have a good gauge of at least understanding what's happening from an insights perspective or through the data, then you have to continuously plan for all the various scenarios, like what's happening in demand. Are we seeing a spike that's going to pull back? So we have to be careful about leaning too much into inventory. Are our safety stocks too high, too low? It's not just trying to make sure you grab demand, but also there's a point where cash is extremely important, and leaning too deep into inventory in any given time can lock up too much cash in a period of time where you need to be very, very conservative on watching your cash and cash flow. So there's a lot of questions that you need to be asking yourself, and one of the best things to do, and some of the best brands that we've worked with do, is they've increased the frequency of looking at their demand planning, running their S&OP processes, just constantly understanding what's happening and talking to their team from all angles, from finance, from what sales is seeing, what supply chain is seeing, and so on. In addition to upping the frequency on your demand planning side, it's also critical to feed that back into your forecasting. And, I say here, we see brands that are reforecasting sales up to weekly at this point. And part of the reason is that the new data that comes through every week gives you a completely different perspective of what's happening. So as you're getting insights, it's critical to feed this back into your forecast and then scenario plan. Like, okay, well, we've seen a spike that happened this week. What happens if that spike continues to go up, or what happens if it retrenches? It's critical to continual reforecast and scenario plan so you can understand where your risk and your opportunities are. Also, it's fundamental that you're looking at cash over the next 3 months. This is one area that we recommend to every business that we work with, is that you're running a detailed weekly cash flow that looks out 12, 16 weeks. So you know what are your levers that you can pull to build cash, to if you're running through cash quickly, what are your alternatives, so on. And then also make sure you're reforecasting for big impacts, such as a lot of people are getting these PPP loans. Well, there's requirements around how you use the loan. So make sure you're reforecasting to make sure that you're using those loans in the best way possible for your business. So these are some of the cool tools that really help you get insights into at least understanding what's going on, and then consistently allowing you to react and adjust as changes occur. I do want to touch on an area that we spend a lot of time on, and unfortunately, it's just a really tight time right now in terms of the capital markets. If you look at where we were at, let's say January, February timeframe, it was a pretty normal, pretty healthy investment market for the equity providers. The lenders were pretty aggressive in getting new lending opportunities circle up, had better and better programs in terms of like term loans and so on. A lot of that has changed significantly in the past 3 weeks. The VCs and PEs are pretty much froze most of their new deals. They're currently finalizing a lot of the rounds, or they've been recapitalizing existing portfolio companies. The only ones that we're seeing out there that are looking at new deals are those ones that are value investing right now, and they're doing so with valuations that are down 25 and up to 50% from where they were pre-corona period. The other area that we're seeing is we're just starting to see some distressed acquisitions, some mergers. We haven't seen a lot of the distressed investors coming in yet, but because they've been strengthening their portfolio. But our expectation is they're going to start coming through in the next 1, 2, 3 months. And a lot of the conversations I've had with a lot of the equity providers is that they don't see the opening of the capital markets to the extent that they were 3 months ago for up to potentially 9 to 12 months. So in the next 3, 6, 12 months, it's really critical that businesses are structuring themselves in a way that they can maintain as much as they can through cash flows, and not expect that there's going to be the next round of capital coming through from an equity or even lending perspective. So a lot of change is going to occur in terms of how you think about managing and running your business, especially if you're in a period where you have been or were burning through a lot of cash on a monthly basis. Now, one good thing is the government has stepped in and supported a lot of small businesses. I'm sure you've all watched the webinars of the different programs, and the past couple of weeks was trying to understand how this is going to work. I think it's starting to really come through now. A lot of the businesses that we work with have already submitted their applications. A number of them are starting receive funding. Right now, we've seen most of the funding come through small banks. None of the big banks have really opened up a lot of the funding yet, although our expectation is that a large majority of the, especially the PPP loans, will be funded in the next 10 days. Our recommendation right now is that make sure you understand all the programs and try to leverage all of the programs in the best way for your business. But just make sure that you understand what you can do and can't do in terms of how you're structured from an equity perspective. If you've got an investor that's backing you, make sure that you work through the structure of some of the intricacies of the ownership structure and the affiliate structure and so on. But again, there's a significant amount of information on that. So I'll leave it there. All right, so what's going to happen? What's coming? What do you need to prepare for? You know, we are fortunate that we get a view of the world from not just from the product side and the brand side and the manufacturer side, but we do work with a lot of retailers as well. And the conversation on the retail side is that it really could take up to 12 plus months to get back to a new normal from a retail perspective. And what does that mean for groups that are, you know, product manufacturers? Well, that means that share of wallet that would typically go to, you know, restaurants or through your beauty services or fitness or even travel and holidays and so on, a lot of that is just not going to recover as fast. And those dollars, those discretionary dollars, are going to be shifted into some place. Like, people will continue to spend. And so where they're going to spend, our expectation is a lot of them are going to start moving to product. Also, I've been on a lot of calls and conversations with brands and others, and the expectation is that people are going to want newness. People are going to want products that are clean and natural, and this is going to have a tremendous impact into the consumer's perception of products and lifestyle and so on. And so a lot of those movements are all moving towards natural, consumable products. Food and beverage that's better for you, that has clean ingredients, beauty and personal care products. All of those things are going to, what we expect is going to have a significant increase in volume over the next 3, 6, 12 months. And so if you're, which most of you are, in that space, this might actually be a really good time for you to build brand. That said, it's also going to be a recessionary time frame. And so the amount of uncertainty in terms of how this will impact you, how this will impact your business, how it will shift from month to month and week to week is something you definitely need to plan for. And not all food and beverage is going to win. And there's consistent kind of areas of consumer that perform better in recessionary environments than they don't, you know, in other environments. So for example, random things like candy does extremely well in recession, right? Alcohol obviously does pretty well during these time frames. I mean, there's categories that do really well, and then there's others that get pulled back. Apparel and accessories and certain elements of those will have a really tough time in the next, call it 3, 6, 12 months. And so it's important for you as the brand to understand not just what's happening in the short run, but look back to history and say, what has happened to products in my category in previous recessions, and what are things that I could prepare for? Also, keep understanding where's the outlooks coming from? What information can you understand? What are different channels that are opening up due to all this disruption that you can leverage more, such as e-commerce? More and more e-retailers are going to be popping up and have been popping up. So there's more distribution opportunities that can occur. We have one brand, Spudsy is a brand we work with, and they have an e-retailer that's just been creating a ton of volume for them. They just completely unexpected. So it's looking for those unique opportunities to prepare for and constantly looking at risk and opportunities. It's going to shift a lot, and continuous planning is going to be critical. So with that, I'm gonna stop there and pass it back, and then we'll open up for a bunch of questions. Are you there?
Yeah. Hello, everybody. This is Ari Roz from Once Upon a Farm. Thank you all so much for participating and being a part of this. This is our first webinar, and we hope that it has brought some value to you today. I want to take a moment just to say thank you, first of all, to Jeremy for agreeing to be the sort of the test of this the strength of this community and this group, to see if we could really bring a great group together for a virtual event. And I think that with everybody on, we've shown that yes we can. If you just flip to the next slide, I also want to thank all of the sponsors who have gotten involved early to help with the founding of Naturally San Diego. So all these brands have, given their time and their energy and their, their sponsorship dollars to help us get off the ground. We are continuously looking to add additional sponsors. So if you are interested in sponsorship, please feel free to reach out to us at info@naturallysandiego.org. Also, if you have any questions following this presentation for Jeremy or for any of us at Naturally San Diego, again, please use that email address and we'll try to get back to you as quickly as we can. We are now going to move to the Q&A portion of this virtual event. So we have so far just one question in the chat box. Hopefully, hopefully we'll get a few more. So while Jeremy's answering the first question, if any of you are brave enough, please submit your questions into the chat box, and I will make sure to read them out to Jeremy to have him answer them. So without further ado, let's go to question number one. This comes from Katie, and she says, we are really curious about how you are seeing trade spend and marketing dollar allotment shifting for brands in both retail and online channels.
Yeah, so as we were going into this kind of surge purchasing period, a lot of the brands actively tried to shut down all of their trade spend and their OIs and so on, just because you just had no idea what was going on. And if you got caught in an OI period where bulk buying was occurring, it's just giving away money at that point. As things start normalizing, what is really critical, again, going back to the point I was talking about from a data perspective, is really understanding how your products are performing on shelf. And if your product's executing extremely well and you're executing extremely well against the new norm of your category, then you need to just restart thinking about how you're going to address continuing to drive volume. That said, I think that we will be seeing probably in the next month or so getting back to some normalization about how you execute in the store. So I think it's really critical to try to understand, at least today, how are you performing? How's your category performing? And if you're sub kind of the category level, then you might need to start leaning into some spend to get your volumes going. One thing that we had been asking about with a lot of brands was, what's the viewpoint from the buyer? our expectation was the buyers would be pretty flexible in the next, through the past month of like what happened, lack of understanding about what's going on, and were they going to be rigorous in terms of if you're not performing at certain levels, that's okay. You know, it's this period of time. I think the buyers have been okay, but going forward, I think that they're going to go back to their normal patterns immediately. And that means if you're not performing based on the new expectations, you are going to have problems with continuing to sell through those retailers. So it's time now to really understand how you are performing. And if you need to lean into that, you need to address that. That said, you also need to be very mindful of cash and cash flow. A lot of the brands right now are thinking to themselves, I've been leaning into a channel such as Amazon where I don't make money. Why do I keep doing that? Or should I completely rethink about pricing, promotion, shipping, all of those things as it relates to these channels where I'm not making money? That is critical right now because, again, we're not in the world of grow, and nothing matters but growth. Right now is you need to build the brand, but you need to make sure you maintain cash and cash flow over the next 6 to 12 months when the equity markets might not be available to you. One other point is, as it relates to shifting marketing dollars, a lot of brands are moving their marketing dollars to online. What we'd recommend is you really understand the profitability of those dollars. A lot of what we do is we'll work on understanding how much we make or how much we lose on the first order that all of the consumers have coming to your direct-to-consumer. And then how long does it take, if you're losing on the first order, how long does it take, how many orders and how many months does it take to actually pay back? And you know, I would expect, or I would really push for trying to make money on the first order if you can. If you're not making money on the first order and you're assuming or guessing that you're going to make money on subsequent orders in the next 3, 4, 5, 6 months, it's a risky endeavor to say that that's going to happen right now, which could just simply mean you're going to burn a lot of cash to drive growth. So make sure you really understand your profitability of those marketing dollars in these DTC channels. And again, it's not about just grow. It's about making sure that you grow smartly and profitably in these next 3, 6, 12 months.
Thank you. Thank you very much. There's a lot of questions, Jeremy. So we're gonna do a little rapid fire now.
Okay.
I guess we got people interested in writing into the chat box. So here's a question from Mark. He says, the PPP program addresses sole proprietorships and independent contractors. What about general partnerships? Do they qualify for funds as well?
Yeah, so we've seen diversity in what the interpretation has been used by the banks. However, we've seen a number of banks accept the K-1 guaranteed payment as part of an employee's income calculation or payroll cost calculation. If you have a bank that is not accepting that, you can do one of two things. One, press them that, hey, the rules are not very clear, but in other kind of governmental rules as it relates to the definition of an employee for those individuals that are K-1 employees where their principal income comes from that business, those definitions typically include them as an employee. So I would press back at the bank if they're not accepting your K-1 as part of that. If they don't accept it and it is pretty material, you might want to look for other banks that will accept it.
Okay, thank you.
Really quickly,
Jessica asked,
what you want to look for is line 4, number 4 on your K-1. That is your guaranteed payments. Those are the amount that you would quote unquote consider as employee cost.
Thank you. Jessica asks, there's been a big foot traffic conversation that natural specialty is down and big box grocery is up. Do you see that shifting, or is that a new normal?
Yeah, I don't know. That's a great question. I haven't even thought about it, but I will say, if you think about it more broader, there has been in the first kind of 3 to 4 weeks of this, a drive towards lower price point, more legacy brands. If you see Lay's and Frito-Lay products are everywhere. You just see them every grocery store you're going to on conventional, and it's crowding out some of the new products that we're starting to make headway into these areas. I think that will start shifting, especially as we start moving out of quarantine. There is an assumption that people are going to want newness. I mean, you guys are all feeling it right now. We're in Groundhog Day, right? Same day, every day, right? As we come out and we start going back to work and all that, it really is going to drive people to try different things and new things. The problem is that they're not going to have the ability to do it from an experiential perspective. Again, going back to the limited capacity around restaurants or around spas or hair care or whatever. So where our expectation is the newness is going to be driven through products, which means that these nationally specialty grocery stores and the better for you products are showing up in conventional stores, I think are going to start really performing, call it back half of May, going into June, July, and August.
Okay. T. McGraw is asking, he's asking basically what data would act in your mind as the signal that we should be sort of relying on to drive our business forward? And is there any data that we should be ignoring at this crazy time?
Yeah, I'd say that it's a great question. I think it needs to really be a combination of the 3 data points that most of us have access to, or we can pay a little bit, unfortunately, to get, is understanding how the product is performing on shelf. So if anyone's in Whole Foods or Wegmans, you should absolutely be pulling that data and looking at it weekly. Like, there's no reason not to, right? It's free. 2 is understanding how the distributors are shipping to your customers, right? You can buy relatively cheap sell-through reports from UNFI, and KE has it available as part of their marketing dollars. So you can see how the product is pushed from the distributor to the retailer. And then lastly, it's the POs that you're getting and shipping out to those distributors. What you're looking for is disconnections between the 3. So you might be, this week, you might have had your volume cut in half for whatever reason at Whole Foods. Well, you know the flow-through impact is going to hit your distributor, and it's going to hit your sales to that distributor, but it's going to lag 1, 2, 3 weeks. So if you can see indicators early at the retail side, you can start flowing it back into what you need to start planning from a manufacturing perspective. And vice versa, if you're seeing spikes, you need to start planning for those, addressing increasing potential production because you're seeing spikes at the end user. What I would avoid is those charts where I'm showing of a 1 or 2 day massive spike. Like, you can't plan your business around that. Like, that is just noise. It's very cool, interesting noise, but it's noise. And what you want to look is week after week of trend lines in certain specific directions.
All right, thank you. That's a great response. Very helpful. A few more. So Matthew asks, will the online sales migration stick? The massive spike we've seen with Walmart.com, or do you think the consumer will revert back to old habits?
I heard a stat about a week ago that something like 40+% of the traffic is coming from online is coming from new customers that have never bought online. So my 75-year-old mom is now buying online for the first time. Will that stick? I think so. I think maybe not the same levels that she's buying now, but I do think that we've now introduced pretty much the full population to buying online. And that is just going to have a tremendous impact into where the world's going to move in terms of the balance of brick and mortar and online. I would say that that trend has been going on for 5-10 years now. What this event has happened is speeded up by probably 5 to 7 years. So where we would have eventually been then, we're going to be right now because it's forced us all to become online shoppers. What does that mean in terms of the world of retail? That's more of the harder question to understand, right? Are we going to have the same kind of showrooms that we have for apparel brands that we're going to have going forward? Are we going to have grocery stores and wellness shops and beauty shops and all those act and perform the same way that they do now? I think it's going to completely get transformed. And where the transformation will come from is entrepreneurs sitting at home right now, or future entrepreneurs right now thinking about the future of retail. There's going to be some really cool, innovative retail plays that are going to happen in the next 12, 24, 36 months that are going to transform retail, which obviously have a direct impact into online as well.
Oh, very interesting. I look forward to seeing what those retailers look like. Adam wants to know if you have any perspective on the food service segment, particularly on corporate campuses or large college campuses, where right now a lot of natural products brands have a substantial business. Do you think those will continue, or do you think those will go away?
Again, I think that the second half of this year and the beginning of next year is going to be a really, really great time for consumer products. And, you go to these corporate campuses, they might not be offering the same wellness services that they have, like large yoga groups, but they might have much more innovative, much more better for you clean products, right? That's easy for them to do in a period of time where people are still going to be careful about sheltering and, all of the things that are going to still happen. It's not going to change until we get a vaccine. That's the point that we're going to be in going back to what we call as normal. So until then, people are going to stay away from each other to some extent. And the thing that you can still engage with is products.
I completely agree. And Matthew asks, does anyone make money on Amazon? Was that a joke, Matt?
I mean, no, honestly, that's a huge question. We had one brand that's a staple brand. They went from, something like $10,000 a month to $80,000 a week POs from Amazon. And they had no idea what their profitability was on Amazon. They'd never looked at it. And so when we started diving into it, it was super clear we needed to raise price point by at least $2 from a $5 item to a $7 item, just so that make sure that we don't lose money, much less start making some money off of Amazon. So it is really critical that you understand the full profitability, the contribution of each one of these channels, because you could be feeling great. Hey, Whole Foods is blowing up, but all the flow through impact, you're not making money on it. You just need to be careful of that.
Yeah, that's a very good point. So Chris is wondering, what is the most creative sales or marketing pivot you have heard of from this environment?
I don't think we've seen it yet. And the reason I say that is the first 2, 3, 4 weeks, we were all trying to figure out what the hell's going on. That first week was, how do we survive? I know every one of us in the back of our minds like, shit, we're going out of business, right? This world's coming to an end. It's horrible. But then as we get through the first week or two and we're triaging, we're making sure we know what our capital position is and so on, I think now is the point where entrepreneurs are really going to start getting creative. I think we're going to see some cool things. We did see some early signs around the retailers, a lot of them in the wellness side, especially the boutique fitness. They immediately started going online. There's a brand called Forward Space. Within a few days, this is a dance fitness concept, and within a few days, they were having 15-minute hip hop sessions for people out there on Zoom, right? I mean, they were doing that within a day or two. And now it's led to them doing classes online, all these kind of things. So these retailers have been reacting very quickly in terms of how the hell do we keep things going? I think the product side is going to be really innovative in the next couple of months.
Man, you just have me getting more and more excited about what's to come. So Mark, maybe it's the quarantine. Mark asks a follow-up to Adam's question about food service on college campuses and corporate campuses. Knowing that remote learning is kind of becoming the new normal and a lot more people are realizing they can get by remotely working, are we going to see leaner numbers of students or employees on these campuses driving down product assortment and the need for as much product in this channel?
It's very possible. And I would say that any kind of channel that's dependent on proximity and, delivering product to groups of people in a large group format is not going to, it's not going to be good for the next 3, 6, 12 months. So it's not just the college campuses. If you have a strong food service business and let's say restaurants or coffee shops, it's not going to be the same norm again until we get to a point where everybody's vaccinated and we can just go back to getting our coffee every morning and going to lunch and so on. Sorry.
All right. So
that said,
yes,
we should be seeing a significant volume increase coming from the grocery stores that hopefully should offset it, depending on if you've got a healthy mix in your channel strategy.
Okay, well, that was the last question in the chat box.
Well,
Jeremy,
I'll just give you my last, here's how I see the world. And this is the world according to Jeremy, so you could just take it for whatever. But I do think it's going to be interesting to see when the country starts opening up. And as it starts opening up, I just don't think that you're going to see your normal haunts going to be open and in the same way. I think restaurants are going to take a while to get back up and running. As they do get up and running, I think that they're going to limit the capacity anywhere from as low as 25 to 30% of what they had before. So that means if you're in a restaurant where its capacity level is 100 people, they might only let 20 or 30 people in at a time. What that means for the retailers is for them to address that cost structure, there's a high probability they're going to increase prices. And so your normal, nice dinner out for $100 might be 150 now, or 100 or 200. So it's going to take a while for this to get back to a normalization on the retail side. And this is our opportunity from a manufacturer brand perspective, is that, people are going to be still looking to engage in good food, and I do think that the move towards clean, better, natural, better for you is just going to accelerate dramatically. We've seen on the beauty side, and I think there's going to be articles coming out very shortly, that natural beauty is doing very well as compared to legacy traditional beauty brands are not performing at the same levels right now. So it's going to be a confluence of all of these factors that, again, most of them, if not a large majority of them, lead us to natural product companies. So while it's crazy and it's going to continue to be crazy, we might be in a good position for the next 3, 6, 12 months.
I love ending that with optimism. That's a great note to end on. Thank you so much, Jeremy. This has been fantastic. You've done such a great job fielding all these questions. And thank you to everyone who participated. Thank you to all of you on the webinar. I just want to let you all know that we are recording this, and we will share a link to the recording to all of you. So please feel free to share that within your teams as well. Hopefully this content can prove helpful. I also just want to say, if you are interested in learning more about Naturally San Diego, please follow us on LinkedIn. Please follow us on Instagram. You're always welcome to email us at info@naturallysandiego.org. And I'm very excited that we're going to be launching our website very, very soon, and we will send you all information when that happens as well. So thank you all for being a part of this community to help build it, and hope you have a great rest of your day.